Welcome traders. Now today I'm going to do something a little bit different, and I'm going to do a tape reading / scalping session with you all today on indices. As you know, today we had CPI release, which was at 8:30, which was this bullish candle here. That was the news release, and then as you can see, we've immediately rebalanced and it looks like we're seeking higher. But I just want to do a quick little tape reading session with you for the 9:30 equities open and kind of show you what my kind of logic is when I'm looking to trade on a day like today. So quickly, the first little task I want you to all pause right now, look within this section of price, pause it, have a look, where would your dealing range be drawn to and from as your fulcrum points. So just quickly pause and have a look at the chart, see where you would draw your dealing range from on the 15-minute. Obviously I'm using the lower time frames as I'm not going to sit recording for hours on hours on hours. I want to do a quick hour or two, hopefully something can play out and I can take a trade and show you all the logic before it happens. So in that section of price, the two fulcrum points for the dealing range are right here to right here. Obviously this is an all-time high right now, and shorting this isn't the most ideal, but a lot of people will be long in this right now, so my instincts are telling me that we seek some short-term discount before the move higher. Now, going back to why this is our dealing range, as you can see, this low and this low got raided. If you want, you can draw it from here. So we had equal lows raided, and then the energetic move with displacement to the upside. So this area right now is our fulcrum point for our dealing range. And my initial thoughts are, after seeing this kind of price action in here, is that we drop lower into this breaker here, 15-minute breaker, and this BISI imbalance. Now we can drop down to the 5-minute to refine that a bit more. So that would be this 5-minute imbalance in here, combined with these three up close candles, which is our bullish breaker. I'll show that to you now. As you can see, these line up perfectly, this bullish breaker, this BISI imbalance. So this right now is an area of interest for downside. I'm just going to delete that and that because they're unneeded right now. So we have this bullish breaker and this BISI imbalance where I'm expecting price to draw down into it before some continued upside. Basically, grabbing some liquidity, clearing out some long traders who are profiting at the moment, all through here, people potentially buying, accumulation, manipulation, and then I'm expecting a drop into here with this bullish breaker. And if price sets up the way that I want it to, I will be taking a short. So let's just quickly go and check the ES market to see if we have any SMTs that are in play. So we'll hop over, draw our same dealing range again. So when you're drawing dealing ranges, you want to look for explosive price moves with displacement and liquidity being taken. So those are the key points to think about when you're drawing your fulcrum points for your dealing ranges. Now, this imbalance has my attention down here, so that will be an area of interest. And let's just have a look on the 5-minute, see if we can refine it a bit more. Yeah, perfect. So as you can see right here, we have this low. Now, where is this low? Well, it was previously this swing low was formed in a BISI imbalance before this push higher. So this area in here, again, has my attention for downside before some continued upside. So this area in here, paired with liquidity, so this low and this imbalance becomes a point of interest for me. Now, if you are aware with these markets, as you can see, over the past year or so, even longer, since 2023, so about a year, we've been trending bullish. So a lot of people are bullish right now, and I'm not one to just call a top and say, oh, this is us turning around for some longer term downside, but for continued upside, I would like to see a drop down into areas like this, almost to grab liquidity, provide some smart money liquidity, taking out long traders who have been profiting for a while before they continue up. So anyone that was buying in here, buying through here, all these failure swings yesterday in PM session, and then accumulation, manipulation, and now I'm expecting us to seek some discount. So if we get a nice setup, I will definitely be trading this. Now, as you can see, I'm not on the futures chart, I'm on the CFD chart, just because I'm not trading on a futures broker right now. So I will be definitely taking a trade if it comes up. So I just want everything to line up well, and that is the reason that I'm trading the showing you the CFD chart right now. So we'll just hop over to NQ and see if we've got any SMTs. I'll do this on the 15 minute because it's a bit clearer. The futures chart's a lot cleaner for SMTs, but on the 15 minute, anything below the 15 minute on the CFD gets a bit haphazard with the data. It's not extremely accurate below the 50 minute, as you'll notice. If I drop to the 1 minute, there is lots of volume imbalances and stuff pretty much after every candle, so it's not the cleanest. So we'll do SMT analysis on the 15 minute. Now, as you can see right here, this low that was made in Asia session and this low that was made before the news release didn't sweep, whereas US 500 did take this 9 PM low, and ES did take the 9 PM low at news release, so sorry, 15 minutes before news. So right now this isn't high probability setup. I'm just showing you what my kind of thinking is when I'm approaching a day like CPI. Now, a lot of people are bullish on CPI, and rightly so, because Nasdaq has been bullish for pretty much a whole year straight. So I'm basically anticipating a drop down into here, whilst everyone else is long in this, seeing this big run up as a manipulation. And as you can see right now, we're kind of not displacing as of yet because we don't have the third candle, but we're starting to create a change in the state of delivery here after taking this liquidity, leaving this breakaway gap. So let me just do that for you on here. Now, with the SMT favouring US 100, so as you can see, this is the leader, and right now it is showing those signs. So my bias would be to short the ES CFD or US 500, and my kind of ideology would be this breakaway gap. So this area that was left unfilled, this was classed as a breakaway gap to me. So this will be a breakaway gap. And then obviously we have a change in the state of delivery if we get a close below this on the 5 minute. So that could be a potential shorting opportunity. Now, right now, why I don't like that short is because obviously we've got bullish SMT. Now, what would sway my mind with this bullish SMT? Well, the simple fact of it is I want to see displacement below this low. So if this low gets displaced below here, this will be in play for me. Now, as you can see, we did not close below this change in state of delivery, but we might get an immediate rebalance right here. Does that mean I just go in and short this thing? No, it doesn't. But it's all building that narrative to why we could work down into that previous area that I showed you, this imbalance with this liquidity. So we're going to see how this plays out. For now, if we get a nice touch here to this candle's low, this 920 candle's low, and then we close below this candle's closing price, so if we close anywhere within this wick or past this wick after immediately rebalancing, then that would give me a nice little tip of the hat from price to say, right, we're potentially seeking discount. So we'll just wait and see. As you can see right now, we've just tapped it, and we've got 3 minutes 30 left on the candle, so still a bit of time. If this candle closes below this candle's open and this candle's closed down here, I would not want to see price coming back up into here. If price comes back to this breakaway gap after closing below this candle's opening price and this candle's closing price, then that would be problematic for my short idea. The same way it would be problematic if we break above this high, but that could set up a better premium for shorting opportunities. So let's just see how we get price forming, see how this candle closes and see how we play out. Hopefully I'll get a trade and call it live for you all so you can know what I'm teaching isn't just a crock of shit, because a lot of these Twitter influencers try to overcomplicate it. That's silly shit like CRT. That's just an MMXM. CRT is literally just a marketing technique to make people only see things with 3 candles, but seeing a 3 candle pattern is not any narrative to take a trade. Having a key level and then a CRT is just an MMXM. So forget all the Twitter bollocks. Let's actually read price how it was meant to be read by the guy who designed algorithmic reading, which was ICT. But people just want to throw shade, try and market similar to how he does, disrespecting people. And as you can see right now, we're starting to close below here. This candle's open and this candle's closed, like I said. Let's just see how this candle closes. If that body closes above this candle's low, then again I would expect a retracement into here. This is not me for definite saying this is a breakaway gap, but this is me just showing you what idea I would be having and what I'd want to see for this target to be met and for me to be convinced to take a trade. So we'll just sit through this and tape read. I mean, I could drop to the 1 minute, but you really don't need to. And like I said, on the CFD chart, it does get, oh, it's a bit cleaner at the minute. So we've got 1 more minute left on this candle, on this 5 minute candle, 40 seconds. Let's see how we close after this immediate rebalance. Again, if we get this immediate rebalance and this breakaway gap, I wouldn't even want to see a retracement to this bearish order block. What I would want to see, ideally, would be something like this. So we break lower, below this low, create an FVG with displacement, or any other PD array, to be honest, and then we can get an entry in here. And notice where my FVG lines up. It lines up with this candle's wick. As you know, or may not know, wicks are gaps as well, so the algorithm will treat this as a balanced price range if we can get an FVG combined with this wick. Now why this wick? Well, if you just look over here, this wick right there did do a little raid before creating this little range in here. So it did a raid and then consolidated for a bit. So that basically is telling me this consolidation could be the point where we get our drop after the manipulation, get our drop retracement into, like I said, this type of area, and then that will be my short with a stop loss there. So this wick right here has my interest, the same way I could take a short if we got displacement and price did this and tapped the C of this wick, that would be a short for me as well. Basically treating it like a balanced price range. Now, as you can see here, that is not what I want to see. This candle closed above this candle's opening and this candle's close. So that right now tells me we're either going to chop around or come higher first. Hopefully we just get a displacement, but this does not put the probabilities in displacement. If this candle, this third candle in this immediate rebalance closed bearish below this candle's opening and this candle's close, then that would give me much more conviction to short down here, and I probably would have taken a trade. But as you can see, it didn't do that. It closed like this, so that signifies to me potentially some chop or a run higher, or a higher resistance run down to this target. So we're using this SMT as NQ is the leading pair right now. This pair took the low, so I'm expecting this pair to be higher resistance on the upside and low resistance on the downside. So again, that's why we're favouring the shorts with this bullish SMT right now. But again, this is just a tape reading session, so I'm just going through what I would kind of look for and what I would be convinced to take a trade if it happened. So we're not forcing nothing, we're not stressing, we're not sat here worrying, we're just chilling, just reading the tape. And then if the tape tells me you need to short this shit, Wolfpack, then Wolfpack will short this shit. But as of now, we don't have anything that really screams to me, right, hop in a trade, because this could so easily just run up here higher. I mean, it doesn't have to come back to discount after this bullish SMT, but I'm just looking at it through the lens of what is everyone thinking right now. Everyone's thinking to long this thing. Everyone wants to long the indice market right now. Well, I want to long it as well, but not right now, not at all-time highs. I need to find some either dynamic discount, or I need to find some ideal MMXM with the second stage of redistribution or accumulation to be convinced that I'm going to long it. So basically what that means is the second leg of a market maker buy model, which would be reaccumulation. So if this was a reaccumulation phase, I will be longing it. But as of right now, I see us seeking discount first before we resume higher. Nothing much to report on right now. But I see so many traders, and I understand why, but so many traders will be sat in this right now because of this candle. Traders will be sat through this because of this one candle. They'll see this candle. Oh shit, you can delete that really. They'll see this one candle and then they're hopping into trades, not realizing that you're actually part of a manipulation phase, which is ultimately designed to trigger you in before you're meant to be in the trade. So don't forget that everyone is seeing this chart right now and thinking we need to buy it. But again, it's Thursday, it's CPI. I expect we go higher, but where I do see us going first is down to a discount level. So yeah, if you want to long it when it gets up here and then sit through this with a huge stop loss, fair enough. But that is going to be extremely hard to ever profit because you're basically fighting every force that's designed to make you lose. So we look at it through the other lens of the glass and don't get drawn into huge news release price moves. Now, a lot of the time, I'll leave it about 30 minutes up to 90 minutes before I even trade after news, because a lot of the time, the news release itself, you'll see all these Twitter gurus and all these YouTube people sitting down with a class of people, counting down to CPI, going, we're going to sell this before CPI, and they're just gambling. They've got no clue what CPI is going to do. They're just hoping. On one account, they'll do a buy. The other account, they might have 3 accounts. 3 of them they sell, 1 they buy, and they'll just show you the one that won. And they're just hoping. They're just basically hedging their bets and trying to capitalize on a huge move just off news release without no sustained price run. They're just trying to get wicked out or wicked in and wicked out. Basically like going and putting £1,000 of your life savings when you've got £4,000 on red or black. Like, they're just spinning a wheel. There's no technical edge to that. That's purely just almost gambling greed. Like, they just think they're going to come into the market, gamble on CPI and become rich. But you and I know over however many months or weeks or years you've been trading, it's not that simple. So we just wait for the edge to form, and if we get it, we get it. And look, I didn't even need to take a trade to tell you this was going to chop around for a bit, purely based off this candle's close. So these next 2 candles have just stagnated. As you can see, they've not broke a low, and they're just within this candle's range, all because of this candle's close. Does that look like it wants to sink right now? No, it doesn't to me. This looks like accumulation right now, potentially to fill in the breakaway gap that I labelled before. But I don't really care, to be honest. I've got an idea, and if my idea is wrong, I'm not in the trade anyway, because I don't give myself that ease of just hopping in trades willy-nilly. I need certain criteria to fulfill before I execute. And if I execute after my criteria is met and I lost, then that was a good loss because I've stuck to my plan. And as you can see, right now we're pushing higher to this area. Let's just check the hourly out quickly. See, right now we've just got a huge wick right now. Another point of interest to me would be this candle CE. So we'll get that on that. Drop that down. As you can see, this CE lines up with this candle. SIBI imbalance, so a sell side imbalance, buy side inefficiency. So it was inefficient in offering buy side delivery. So we'll change that colour, maybe make it green. So right now, as you can see, we've not fully filled this breakaway gap. So it is still a breakaway gap if this portion remains unfilled from this candle's low. This candle here is low at 5641.6 to this candle's high. If that remains unfilled, that is still a breakaway gap, which is 5638.4. So we'll just sit and wait. I mean, I am expecting a drop lower first, but that doesn't necessarily look like it's playing out right now. If we had this immediate rebalance drop down here, displaced below this low, I would enter on the CE of that candle's wick or the FVG that was formed. And also, as you can see here, we have a nice BISI imbalance. So this BISI imbalance combined with this wick, hopefully another gap on the other side. This would be a really nice area to short in. So it would look something like that. Let's say we got that entry, 14 points on a scalp, 1 to 1.3, which isn't great, but obviously I don't have the structure. I don't have the structure in here to say, oh, I can refine my stop to here or here or here. And obviously you can see how quickly the RR goes up when you're trading the 5 minute. Obviously structure is going to form if we do break below this area and get a short entry, so I'll be able to refine the stop. But as of now, that would be the stop loss and the exit. And again, I wouldn't look for much more than that because we are so bullish, and 1 to 1.3 R is still okay for making profit. I mean, you can leverage 2% on that, and then there you go. Right now we could have a let's remove this immediate rebalance and get it on the most recent one. This could again be immediate rebalance, but because my idea is bearish, I want to see the body close below this candle's high. So because I'm bearish, I don't want this immediate rebalance to hold. So I want to see a strong close, and then we potentially might get that entry. As of now, just waiting, no rush. Let's have a look what NQ's up to at the minute. So NQ, again, we have this SMT. So from this candle's low to here. So now we've got two SMTs in play, and as you can see, this candle did not take out this low. So this basically is telling me this could potentially take out the high, which is problematic for our short idea. So NQ might be the move. Let's just see. The only reason I like S&P right now is because of these areas that I talked about before. Obviously, if we can keep this breakaway gap refined down to here and break lower, I would love to short that gap there. And this wick, my short would be, if we broke below here, I would take my first short there. As you can see here right now, this candle closed below, which is what we want to see. I will keep this CE on here though for now. Oh, that's not right. When I'm drawing these CEs and stuff, all I'm looking at is this price here. If this price is the same but it doesn't look like it's on the money, see, like here it looks like that's not on, but as long as the price reads the same, that's all I need. It looks like the red's lower than the black, but that doesn't really faze me. As long as the price reads, so when I click this, it says the same price, then that's all I'm really bothered about. So I would love to short this CE right here, if we can break below these lows. Obviously we've got this SMT, I don't know. But I don't need to keep that on, you've seen it. I can delete this SMT. This would be our breakaway gap in here. That would be our breakaway gap, the same way that this would be a breakaway gap. Now I love breakaway gaps because it gives you underlying narrative. if you're breaking away without filling an imbalance, and look what we do, we displace lower. So again, this was the low that was formed, so we're getting that displacement. What's ES doing? ESC lagging around. Because of the SMT that formed, we had bullish SMT here. With this SMT, look, we just ran through it because we had NQ as the leader before, and now after creating this SMT in here, NQ is the weaker pair. Now you've seen me just call this live, everyone's probably long in it. You've seen me tell you where price is going with ideal logic. I'm not in a trade right now, but I'm reading the tape. This is exactly what we're trying to do. We're trying to read where price is going and why it would go there. As I've mentioned before, this breakup combined with this gap, we change that colour, is the draw. This breakup, gap, discount, and look how we rush towards it. I wonder how many people were long in it. Probably a lot of people. And now a lot of people over the week would have caught longs. Even over the past month or so, it's been extremely bullish since 25th of June. So since last month, we've had, everyone's been buying NQ, and it's been very, very clean. But a lot of times once you get to these areas, I still think this is going higher, but the logic is it's a news release day. We have CPI news, everyone is long in this shit. Where would we seek first before we resume higher? I don't think many people would have been thinking to short. But as you can see, we have dropped lower, and actually we've just got into a discount market relative to the 15-minute time frame. Now what I would really like to see, if you notice how prices just tap that equilibrium in there, just quickly rush just down to here. That would be nice. Again, leave this breakaway gap. Let's also have a quick check what DXY is doing. The only thing that I had noted on DXY recently was this candle's CE. This candle here raided these lows that previously pushed price higher. So this candle raided this, then this candle here closed with inside this candle's wick. So almost think of this as like a strong gap. We have a sell side raid, candles closing within this wick's range. So that CE became the point of reversal. So when we retraced up here, touch this candle CE, the drop lower, reverse from this point. If we look at it from the hourly, it would probably be a beautiful hourly market maker sell model, which it definitely is. Again, you've got these lows in here, relatively equal, and then we've got a high resistance push higher, and then we start to get low resistance run on the downside. So we have this first leg here, here. Does this look low? Does this look low or high resistance in here? Other than this initial leg, which came from this sell side pull, which was previously consolidation, this first leg, and then look at that high resistance until we get to that fulcrum point, like I said before, that candle C that was influential. And then if we draw the other side of the curve, we have this. Obviously, and it drops lower. Which looks lower resistance. We've got the buy side of the curve and the sell side of the curve. Which to you looks lower resistance? Obviously the sell side of the curve. So when we're looking to sell, we want to see high resistance up until we get to our point of potential reversal. And then after the point of potential reversal, this was the SMR. And then you've got your low risk sell. And then here is your second stage. I've missed a raid, so that would actually be a high right here. So this low risk, you got the low risk sell, first stage of distribution, and then second level here. This is the area I want you to sell, this. So obviously for buying forex pairs, you would be buying Euro USD or GU, depending on which one was the stronger one, as this candle's taken a high. So that was yesterday at 2 p.m. So in PM session, you could have bought and then held for CPI, because once that high gets taken here, look, notice these highs don't take each other. High gets made, this high takes it, second stage of distribution. So you can be happy knowing you positioned well in PM session yesterday on Wednesday at 2 for today's price runs. So that's how I know when to hold for 1, 2, 3, 4 days if needed. I mean, I don't normally hold past 3 days. The longest I've held this year is 3 days. So anything past that isn't ideal. Again, look what happened in here. So from 9:30, when this immediate rebalance closed like this, I told you we could expect price to chop around. And guess what? That kept me out of a shitty trade. I could have been in this trade right now if I was an amateur. I could have been sat in this, worrying, thinking, oh, this has got to drop lower, but price never told me to sell it. I gave you all the logic before it happened. As you can see, NQ did end up being the better pair to short, even though I didn't short any of them. And we've got this SMT. And like I said, when this low here didn't take this one out, whilst NQ was taking the low here, excuse me, yeah, this was not the A+ setup that I was hoping to find, but you could well have easily taken a trade on NQ, even though it's not extremely clean right now. I'm sure if we drop down to the 1 minute, there'll be some entries. So what would be an entry for me in here? We've got this breakaway gap, and then this short here. Obviously, if you don't get filled on that, you would want to short it as it's dropping. Say you've seen price pop up above here and then close with this candle with an FEG in here, you might consider just hopping in the short on this return here to this candle. So if you missed that turtle soup, this change in the state of delivery could have been your entry there. Boom, short. You could have had a nice little, tiny little scalp from this candle's high. That was your stop. And then you could have had your take profit at equilibrium. Now that isn't a trade that I would take, as you're relying a lot on your spread and a lot on basically your emotional control that could keep you in that trade. So you miss this entry. If you caught that high there, the trade would be from here. So that breakaway gap, this high, and then this low would be your take profit. So that's a nice 1 to 3 with a 13-point stop, which it's not unachievable to catch on the 1 minute. I mean, the trade played out in 1, 2, 3, 4, 5, 6 minutes. You had a 1 to 3, and you didn't even have to get down to the drawing liquidity, which is great. And I often like to do that. I'll often get out before my drawing liquidity is correct, but try and capitalise with at least a 1 to 2 before the drawing liquidity is met. Because I know if my idea were going down here and I'm exiting here with a 1 to 2, I can sleep easy if it reverses. If it gets to here and reverses, I've not let a 1 to 6 just slip away. I've secured my funds. And now obviously you have that short there, another short that you could have taken was this IO Fed. I'll do it now. This candle's low here. Look, this candle's high to this candle's low, and notice what's on the other side. A BISI. So you have a BISI and a SIBI, IO Fed, drop. I mean, I wouldn't complain after being in a trade for 1, 2, 3, 4 minutes. I'm being in some nice profit. These are the type of entries you can look for. Those trades that I just labelled are not trades that I would take. I'm not usually trading the 1 minute. I mean, I do it here and there, and I might do it today. But usually, as you can see, on the 5 minute, like I said, after this immediate rebalance, after we closed, I knew not to get in. So from 9:30 onwards, I knew not to trade short right now. So that's kept me out of one losing trade and 1, 2, 3, 4, 5, 6, 7, 35 minutes. 35 minutes of unwanted drawdown, which is huge in this game. Sitting in a trade for 35 minutes in drawdown, or a tiny bit of profit, is brutal. And what I'm teaching you here is how to decipher. See, my idea, like I said before, is this high might get ran. Obviously I didn't want to see that, but what price is telling me right now, that is looking like the likely scenario. Another area that I would like you to be aware of here is the fulfill of this imbalance. So this big news push, the fulfill of this, if we come up to here or break through it, this could be an area. The premium high as dynamic premium and discount to seek this high out. As of now, nothing that is interesting me. As you can see, it's not very clean on the 5 minute. Do have this SMT, oh, that's tight, this tiny breaker in here, but again, I wouldn't be short in that breaker because this was a bullish SMT before, so you could have caught a short from this candle's low right there, bang. So when this candle closes below this candle, you could hop in a short on that candle there, this candle's high, and then we start melting towards that draw that I told you before. So this right now would be the breakaway gap of interest to me. And look where we're drawing to, people. Exactly where I said. And although we didn't take a trade, this little session in here can improve your price reading so much. I'll give away so much free sauce. How to stay out of losing trades, when to get in a trade, when to consider a trade, how to trade against the retail market, all within a couple hours. I mean, hopefully I will watch this until maybe potentially 11. We'll see. If we can reach my target on NQ before, as we get into a London close, let's drop down to lower time frame, see if we've got another entry. That would have been a nice entry right there. This candle here, the body of it. Now where would your stop loss go if, say, I shorted here? Let's say Wolfpack's in short. If we think back to before, when it comes to breakaway gaps, this little gap in here, this little sibby, is a balanced price range and also a breakaway gap. So I would not want to see price, if I entered here, I want to see it close. I want to see price close below this price. And as you can see, the body's respected that perfectly. And my stop loss, so I would short from here. So I'd take a short. My stop loss would go, let's give it a bit of leeway. So let's say maybe that much over. And my profit target would be there, a 1 to 2.5. And then I would also have that could be a partial level. And there's the draw done, completed. And that would be my final target down here. So you could take a partial below here if you like to take multiple partials. I usually just take the one. So let's say I took a partial here, and then I would take my final partial at the bottom of this imbalance. Maybe one partial here, one partial here, one partial here. So 3 partials if you wanted to. I usually would just take the one. So it would just be a partial here and then exit. As you'll see in my entries, that is my usual philosophy. But that was a great session, people, because you've seen me call it live before. It's happened way before the 11 o'clock hour that I previously suggested. So that's it. Target smashed. Trading against the masses, simple premium and discount logic, and then reading the tape within here. Breakaway gap, change the state of delivery. That's a short. Got another short here. And then look how we're ripping. Another area now that you could potentially see getting hit is this area. Again, liquidity in an imbalance. So that could be potential before 11 for some more downside. So yes, people, that is basically all I wanted to go through today. You see me calling it live for you. NQ is obviously the better short. And you've seen the draw and liquidity get hit. You saw the whole logic before. As you can see, market is open. This is not hindsight bollocks. And look at how we're ripping down. So let's just see quickly if this target can get hit with this liquidity in an imbalance. And then I'll quickly log off. Apologies, people, I just had to stop the recording there for a moment, but now I've got back on the charts. NQ blew through all of my targets. This imbalance, this liquidity with an imbalance in here. As you can see, we blew through that like it was nothing. So again, some of these failure swings could be into the sights of NQ next. If we just have a look on the daily, yeah, potentially this is a balanced area, so we're probably seeking this large imbalance in here. But I had a pleasure today, absolutely calling price to a T. Unfortunately, I didn't get any entries as I was more focused on the recording for you lot. But that is why I do this. As you can see, ES has just nicely got to my target here. And notice up here, we didn't quite reach that hourly CE. We didn't quite tap it, but that would have been a short for me up there. If we got to up there, that would have been a short for me for a nice whatever RR. I'm not going to stress myself out by thinking about how much money I could have made shorting that. But as you can see, we absolutely blew through the targets. NQ outperformed DS massively. I wasn't expecting such a big move from NQ, to be honest. I should have been more present watching NQ as well. But like I said, today was more about focusing on reading price with you lot, so you can see how the 1% of traders who actually make money from this day to day, then you can start to adapt your own trading, sticking out of bad trades, getting into good ones, how to deal with good losses, bad losses. If, like before, when it was here at this immediate rebalance at 9:30 EST, some people would have just shorted that without any direct confirmation. And there is a time and place for doing that, but not once you have a news release, immediate rebalance, and then you start to chop around. Like I said, when that happened, I expected us to come back into here or to chop around. We actually did both. We chopped around and returned to completely fill that breakaway gap. So what does that mean? That means that actually just wasn't our breakaway gap. This was the breakaway gap. Apologies. I like to use the magnet just because it makes sure it's actually on the candle's highs and lows. So this was the actual breakaway gap, and that was the consequent encroachment of that hourly wick. So that was another shorting opportunity for me. Unfortunately, I didn't get up there to short it, but again, I'm just really happy that you got to see me call price live before anything like this played out. So it's been a pleasure today, people. I hope you can take some things and apply it to your own trading from this video, because I feel like this video was extremely useful to the average trader on what actual processes to go through. Obviously today I was showing you a lower time frame outlook on NQ, but this is the best outlook to have with the indices if you really want to be, number one, pyramiding into positions. So if you want to catch multiple entries, you have to be trading the lower time frame. If you want to have quick velocity of money, so if you're working a lot and you just want to be in a trade for anything up to an hour, maybe even less, up to 30 minutes, then you need to be on the lower time frame so you can work it around your 9 to 5 work. Also, if you can pyramid efficiently, it is the quickest way to grow money and pass accounts, challenges. This is the best way to do it. Also, for everyone in this group who is an ICT trader, indices on the lower time frames are always the cleanest with respecting ICT principles, like I've shown you today. Okay, great, I didn't catch a trade, but I called the markets to a T for you all to witness live and direct from the Wolfpack HQ. So I hope you can take some advice away from this video, reading the tape, go back over the video, see where my logic differs from yours and how you can improve your own trading. So I hope you have a good rest of your week, people. I will see if I get a trade tomorrow. Probably won't trade the rest of today just because how extended we are right now with NQ. I mean, we blew out my range low, so that doesn't really interest me now. See, a lot of people, look at all these value swings. A lot of people will get drawn into now shorting this, but look how extended. In 1 hourly candle we dropped like 270 points, 262 points, 270 points roughly. So you don't need to concern yourself with the rest of the day on indices. 270 points in an hour is very overextended for the average day. So you could sit here and try and chase a drop lower, as it's very likely going to drop low into areas like this before we resume upwards, but I wouldn't even sit and concern yourself with, because this is a whole range within here that you're going to have to try and position yourself with efficiently. So tomorrow we might get some continued downside on NQ and ES. We'll just see how DXY and the latter set up. So I hope you enjoyed this video, people. Have a good rest of your week. Good luck and good trading.